What is up, Telegram? I hope you guys are doing well. Welcome to the outlook and recap of what I did on NASDAQ this week, how I managed to call the low from pretty much Tuesday up to here, 1,690 points at the minute and still printing higher. So let's dive into how I was actually able to do this. What was the initial framework? If we head over to the NQ chart over here, you can quite clearly see we're in a bullish market. I mean, the NASDAQ is always bullish pretty much. There are periods of downside, but overall it is a bullish market because we know what the NASDAQ actually is. So what do? We traded and filled in this fair value gap here. From a low to high, this was a discount. This is a very deep discount. These three down close candles, these consecutive down close candles are a key level. So when we trade into a monthly key level, you want to be watching, are we rejecting on the daily time frame? Are we showing willingness to go higher? In this case, we were. We had a huge displacement higher on Wednesday, the 9th of April. Big candle higher, which followed by a small range, which is fine. But what happened after that? Our monthly key level was down there. Traded higher, came back down, and then I called this move here. This is the move I called with my private Discord. I will attach some screenshots inside the Telegram. I'm sure I probably did already, proving this, that I called this from here. But nevertheless, I will dive into how I actually did so. Now, I was going to keep this to the private mentorship, but they've learned enough so far. I'm sure their brains are fried with all the information I've been giving them. So I thought I'd give it to you guys first. What do we have as framework in here? Now, my weekly objective was this rejection block here, which we haven't yet hit, and I don't think we will this week. But nevertheless, I said it should get to that rejection block or these highs here, which clearly we ran through and smashed completely. So from here up to there, those equal highs, that is over 1,000 points. Over 1,000 points easily, 1,500 points. That is a lot of money to be made. We were catching sells on Tuesday around this point. All throughout here, we were catching sells. This 4-hour candle was a big buys, not sells, sorry. This 4-hour candle was a big buying candle for us. And then we also looked at these longs inside here. So what was the framework? Well, as you all know, we're in a discount on the daily chart, as I just outlined. And what is the framework here? We have a smart money reversal, a low risk buy, and I was expecting reaccumulation to happen here. Now, if you take a look, here we have a low swept into a discount. Discount of what? Well, we're naturally inside of a discount, and a discount of this range from impulse swing low to impulse swing high came into a discount. What I'm watching for now is displacement. Displacement away from our key level, and that's exactly what we got on Monday. That's what we got. Displacement away. On Monday, you can see we traded higher with a fair value gap, filled another gap, and then took out a swing low in there. Took out a swing low into the fair value gap here. I was catching sells, me and my group were catching sells below that swing low. Now, I'll explain why that swing low is key, but firstly, I want to look over here as well. At this point, this is a breaker. You have a swing low, high, lower, higher, high. So all of this range, pretty much here, is your breaker. We overshoot it by a bit, but not by much. So that is permissible. It is permissible for us to trade below there, just a couple ticks or so. Then we show displacement. That displacement there was the signal for me to say, okay, we should flip bullish now. And my bias that I had originally down here, the bias at this point is confirmed with that candle. Okay, so you're always waiting for your daily bias to actually be confirmed. Now, drop down to the hourly chart again. We caught buys, sorry, I keep saying sells. We caught buys here. How did we do so? Take a look at the 15-minute. This is a market maker buy model. We caught buys up to here. Market maker buy model, how? Smart money reversal, low risk buy, accumulation, second level of reaccumulation. I teach this to an extent that no one else teaches this inside of my mentorship. I teach this better than anyone else because this is my bread and butter setup. This is what I trade all of the time. All of my trades are actually market maker models and usually the second level of reaccumulation. Now, remember that framework over here, that swing low getting ran and then the rejection. Remember, you're waiting for displacement. And that is something I will never teach on YouTube. This stuff is what I will never teach on YouTube. You're waiting for displacement. It is not your key level until we react from it. So our range low is in there and we will reduce it to that. So now you have a market maker buy model, consolidation, stages of distribution, smart money reversal, and then your stages of reaccumulation. If you take a look in here, I called this inside here. I said I want this low to hold. I want us to run this low first, and then I want it to hold for upside. Look what happened after that. Huge move to the upside. We call this move. More specifically, if we drop time frame to the 5 minute, this is where I entered. And I told you all I was going to tell you where I entered and how I entered. If we fractalize this even more and wait for our key time, I like to trade NASDAQ after 9:30 because 9:30 usually gives some manipulation. 9:30 manipulated where? Below this swing low into what? Into an actual breaker block here and a 5 minute fair value gap. I bought as we traded below this low into there. I got an entry just under that low. I put my stop loss up there, put it about there to be conservative, and then I aimed for a simple 1 to 4. We had a 1 to 4 there at the highs over here. So what made me anticipate this? First of all, we'd already swept this low back here. London lows got swept at around the start of New York. We then showed displacement from that point. What sense would it make if we are bullish to drop all the way after 9:30 down back below this low? To me, that wouldn't make any sense. And I told the guys in the Discord that shouldn't happen. So you take a low, high, lower low, higher high. This up close candle here is your breaker block. Price should see support at that breaker. Where was the re-entry if you didn't get in at that point? Take a look. We close above the body of this down close candle at 9:30. We then trade down and higher from that point. You miss that. 5 minute gap, entry. 5 minute order block, another entry. Now, the source I really wanted to dive into, and I did tell the guys I wouldn't really dive into this too much, so I'm not going to give everything away. But the easiest entry here, in my opinion, was the 10 a.m. open, low, high, close. Now, what is an open, low, high, close? The open, low, high, close is basically when we have an expansion candle like this, or here. When we have an expansion candle like this, it is the open, low, high, and then close. So each 4 of these portions of this candle all relate to each other in different ways, and you can participate with different parts of them. If you are bullish, you are obviously trying to participate with the open to low portion, the expansion of that candle. The expansion of what candle? I'm going to teach you something now that you should really pay attention to, okay? The expansion of the 4-hour candle. There is a 10 a.m. 4-hour candle on indices, okay? This 10 a.m. 4-hour candle on indices is very important because it is post 9:30, which usually manipulates. I told you earlier in the video, price usually manipulates at 9:30. So this 10 a.m. candle should be distribution in your said direction. So what we want to see from that is an open, a low, and a high, a close. Take a look back here. This that I've marked out, this orange line, is the 10 a.m. opening price. Anything below the 10 a.m. opening price is a buy, is a discounted market. From here to here is a 270 point move. This is a huge move, right? And how did I anticipate it? 10 a.m. opening price, anything below there is discounted. So when we trade below here into a bullish order block, right there is where I took my second buy. At this point, that candle there, to the point, this is NASDAQ, you can be very accurate with NASDAQ. To the point I bought at that point. Stop loss went below there and we rallied. Why can my stop loss go below there? Because it's 10 a.m. 10 a.m. is meant to be distribution because we've already manipulated at 9:30. So what sense does it make for us to come back down there and then go higher post 11 a.m. It doesn't. Price is in a rush to get somewhere. So price doesn't need to come all the way back down here. The work has already been done inside this breaker block back here. So do you see how all the key times in NASDAQ all tie into one another and relate to each other? I was able to take this buy because one, the 10 a.m. opening price, we're below that. So we should create a low, high, and then rally. We don't need to come back down here because we've already done a lot of work back here and 930 manipulated. And then we take buys with that logic in mind and we capitalize on price. So I took buys here and then got out at this high from this position and this high around here, a previous day high from this position. Okay, so it's all logic and narrative driven. There is nothing random. Now, after that, we saw a really nice pullback into a gap. Okay, this gap is what I called to the guys in Discord as well. This was the second NASDAQ trade I called. We have these equal highs back here, of course, and we traded into this gap. Why did I want to see rejection from this gap? If you take a look at the averages, okay, if we go over to NQ over here, if you take a look at the averages, they all trade much lower into that gap. Whereas NASDAQ barely fills the gap. Okay, it taps it once. What is it tapping inside here? It's not worried too much about the gap. It's worried about this swing low. This swing low here is providing liquidity for this gap to drive price higher into these equal highs. So the logic there is we have, again, an impulse swing, a discount of the impulse swing. We then have the three averages trading much lower, the other two averages trading much lower into that gap than the NASDAQ is. The NASDAQ is clearly the relative strength leader, doesn't need to come much lower than this. We then distribute throughout the rest of the day, and you can see 9 a.m., 10 a.m. What does the 10 a.m. candle do once again? Open, low, high, close. What does the 10 a.m. 4-hour candle do? Open, low, high, close. Okay, so look how every single time aspect ties into the next one. And this is just a quick snippet on what we can do inside the group and inside the markets. Again, the Discord is still open for those of you who want to become our students, so please do check it out. I'm pretty sure there is a link pinned in the Telegram. But I just wanted to give you guys a bit of source on NASDAQ, trading NASDAQ, the framework on the higher time frame, and mainly the opening price source. You will not find this taught many other places because it is not relevant to their trading. This is pretty much everything I trade. Opening prices are so important because it provides a premium and discount relative to that opening price. Now, I will dive into that more as we go along, and in more of these breakdowns of trades I take with the Discord, I will dive more into that naturally. But if you did enjoy this, please do drop a reaction on the Telegram message that this is attached to, letting me know that you did find value in this and did actually enjoy this. With that being said, I hope you are all doing well and I hope you have a great weekend. Good luck and good trading as always. I'll catch you guys then.